Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 24th. It's Alexis Garcia and Ed Carson here, and we'll be going over some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it's a huge week, a big week, probably the biggest, most beautiful earnings week we've ever seen coming up. So tell us what you have on deck for us today.
Yeah, just the big names. There would be Tesla, Apple, Microsoft, and Meta, and a lot of other important earnings as well.
All right, well, let's start with Tesla, shall we, which is scheduled to report Q4 earnings on Wednesday, January 29th. Earnings are expected to rise 7% to 76 cents per share, and revenue is seen climbing 8% to $27.1 billion. And here's why we're watching Tesla. We'll be paying attention to Tesla Musk's comments about self-driving, an affordable vehicle, and 2025 delivery targets, and probably a lot more there, Ed. And as you know, Dan Ives over at Wedbush Securities, our favorite Tesla bull, now believes Tesla's business will grow more strongly this year, and they raised their price target ahead of earnings. Much of that is expected because of the new Trump administration. And if you want to hear more of Dan Ives' thoughts on Tesla, we have a video for that you can check out on investors.com. But Ed, what's on your radar with Tesla? Because it really seems all about full self-driving and AI.
Yeah, I mean that's a lot of it. You look at the valuation of Tesla. It's clearly there's no way that a company that's having sluggish earnings, and not a big pipeline of EVs, and you'd say, boy, that should be that much. Clearly, there's a lot of hopes. The self-driving product has gotten better. It is supposed to be for a second straight quarter of earnings, year-over-year growth, down for the year, but an improvement on that front, so that will be positive. It would not be good if earnings were down, uh, but if that happened. But the focus will be on self-driving. It'll be focused also on the affordable vehicle or vehicles. They've talked about it that they're going to start production by mid 2025. And honestly, Tesla usually shows off a vehicle and then years later it actually rolls it out. So we still haven't seen it. Now that which is making most people think it's going to be like a hatchback version of the Model Y or Model 3. We'll see. We want to also know what is I mean, people are still interested in the EV business. They want to see that there's solid growth. Back in Q4, back after the Q3 earnings report, Elon Musk predicted 20 to 30% growth in EV sales this year. We'll see. I mean, that's a big question. He may, robots. He occasionally talks about that. Will these deadlines slip too? Will he now say full self-driving at the end of the year? It goes on and on. And again, it's a lot of it is vibes, and a lot of it, until we see those things. I mean, and those vibes can be real. I mean, uh, but until we see those products, it's hard to disprove it or prove it. So, it's hard, until so that will make it hard to know how the market react. But expect a big market reaction is what it comes down to.
Right. And we know that Tesla can move a lot on earnings, Ed. So let's go ahead and take a look at the chart. We're on the weekly chart here. And Tesla stock moving above that 10-week line broke out of this cup with handle base back here in October. But maybe last week could have been a point to add on if you were in. But what are your thoughts here with the chart, and what would you like to see set up?
Yeah, I mean, I think you could have added there, though it would have been scary, especially below those levels, and then it's pulled back. I think it's been constructive, though. It's found support at the 10-week line after a huge move heading into earnings. So it's like, how bullish do you really want to get? I mean, everything could work out great, but just with any stock, especially one that moves a lot. So it is on track to have a base after this week. So heading into earnings, it should have a base. You could use the week that up week's high as an early entry in there, sort of a de facto handle that's going to be a little too low to be a proper handle, but I think that's where you could use it. So the technical action's been pretty good. The volume's dried up. I mean, it had better volume that 1 week. I mean, it wasn't great volume, but it was better than those down weeks. So the pattern's constructive. So I definitely think that, heading into it, if you can get above that level, would seem to be a place where people could enter on earnings. I mean, after earnings come out.
Right, and that would be a 439.74 price point there. But Ed, as you mentioned, talk to me because we see this earnings growth really struggling over the last 4 or 5 plus quarters. But as you mentioned, Elon Musk has set some pretty big goals. I feel like his attention may be also elsewhere as he's now part of this Trump 2.0 administration. But talk to me about some of the fundamentals and what's standing out to you.
Yeah, the earnings have really struggled and they've come down quite a bit over the last 2 years. And uh, things have improved a little bit, but partly it's because the comparisons have gotten easier. I mean, that's part of it. It's not like the earnings were great in Q3. That's how turnarounds start. It isn't like, so the expectation is maybe the Model Y refresh will help, but the problem is that that might hurt sales in the first quarter as people wait for it. So it's not clear that it'll really help the full year. I mean, once it comes out, it may be really good. The affordable vehicle, that may be more of a 2026 story because if they start production in mid-year, then we'll see when it really comes out, like really hits in mass production. So, I mean, he's predicted like for the past couple of couple of years to get 2 million in deliveries, and we haven't reached those levels ultimately. So I think that would be the issue there. And then I think going forward, again, if they don't have self-driving, what is their next big thing after those two things? Because they don't really have a pipeline outside of self-driving. So that would raise questions going forward because there is a lot of competition out there and they roll out models pretty quickly.
Right. Well, a lot to follow there, Ed, and we'll be watching. Let's go ahead and move on and take a look at Microsoft, which is scheduled to report Q2 earnings on Wednesday, January 29th. Earnings are expected to rise 6% to 311 per share, and revenue is seen climbing 11% to $68.9 billion. And here's why we're watching Microsoft. We'll want to see any signs of traction in AI services and also capital spending plans. We'll also be interested in hearing any commentary related to Project Stargate and if the PC refresh cycle coming with Windows 10 is winding down. Now, Ed, I think bullish investors and Microsoft are hoping that the company's investments in AI will help generate continued growth in the bottom line. But what's on your radar with Mr. Softy?
Yeah, I mean, that's one of the questions that Microsoft is one of the most important earnings reports because it's in so many things, PCs, it's in software, it's in cloud computing, it's in AI. So all those things. Its earnings growth hasn't been the most tremendous. It's slowed down a little bit. It's still solid. I mean, for a huge company, and it's supposed to be pretty solid through fiscal 2026. Uh, but yeah, I mean, I think people want to see are they monetizing AI? I mean, I think they're basically forcing people to take Copilot and sort of like adding on the fees and sort of, so it'll be hard to tell, is it really being helping or not? On those fronts. On the capital spending front, what they say about capital spending, and I think they had said recently that they would spend 80 billion on, AI or capital spending. So they may not have a whole lot new on that front, but what they say is hugely important for a lot of AI companies that are not reporting next week. And I think that all the NVIDIAs, all these companies that are out there that Microsoft buys products from. So very important for that, even if this is not the fastest grower.
And let's take a look at the chart, Ed, because as you mentioned, that earnings growth, it's been solid, but not as great as previous quarters. And we're in consolidation here for 68.35 official buy point. But nice to see this get back above the 200-day line. But talk to me about the technical action in this chart.
Well, yeah, you can see that the relative strength line was sort of that green line it's improving very, very recently this week, but it's been trending lower. It's definitely since the peak of the stock, but even beyond that. So this has been lagging for a while. And is it time for another run? Maybe, but this has not been leading. So even though it's a big AI player, it's not an AI leader. In addition to the 468.35 buy point, it's sort of by the end of this week, you could treat that 456 area as its own base within the base. If nothing else, you could treat that as an early entry. So if it clears that, or even if it cleared an early entry from the top of 468 through 456, there might be an entry after earnings. And boy, this is going to be a busy week because this is also same day as Tesla, same day as the Federal Reserve. So uh, yeah, it'll be really busy. But that would be where you might find a place to enter this. Again, this is probably not going to be the fastest growth. Maybe you can have a turn and make another run, but that would just be something that people would, it would just be something to watch for. It hasn't been a leader.
Right, and we'll need to make sure to have extra caffeine next Wednesday. But as you mentioned here, that 456.16 potential entry point here. And let's switch over to the weekly just to get a more longer term view. Anything standing out with the fundamentals? Again, we can see this base, probably an alternate entry point somewhere in that level. But yeah, any thoughts here on the fundamentals?
I mean, the growth has just been slowing down. It suggests that, that is, and that is a concern because if they can't make a ton of off the I mean, then Microsoft is spending so much. If Microsoft comes out and says that, that would be huge for everybody else. But that growth is slowing a little bit. The revenue growth still pretty good. You want to see the Azure cloud computing. You want to see those things in there. It's just starting to slow on the revenue side a little bit, the earnings a little bit more. And I think that's supposed to continue in that December. Again, a little bit of a step down. So it'd be great if you could keep double-digit growth going. And that doesn't seem like that wasn't on track for the EPS side. But, double-digit growth, that would still be a pretty solid performance for them.
Right. And just also want to point out here with your early entry point that you mentioned, can you just talk a little bit about, especially when we've had so much market chop, that seems like things may be picking up, but why getting some of those early entry points right can maybe help you really ride out some of that turbulence?
Yeah, especially with a choppy market, or it looks like maybe, with the S&P hitting new highs, that maybe we're exiting that. But early entries, if you are going to play a choppy market, which we have been in, is really important because the market may only go up for a few days. And so if you roll back around, you at least can get out maybe without losing money. But if you buy, often on a traditional breakout, that often means that the stock has gone up for a few days. That means the market's gone up for a few days, and maybe it's due for a pullback. Again, that's in a choppy trend. If you're in a general uptrend, the market may rally for several weeks. And so that's not as pressing, but early entries just seems to be a way to at least a place to start a position. Just seems to be lower risk in recent years.
All right, well, let's move on to Meta, which reports earnings on Wednesday, January 29th. The social media giant is expected to see Q4 earnings climb 27% to 675 per share, and analysts expect revenue to rise 17% to $47 billion. And here's why we're watching Meta. We'll be paying attention to 2025 estimates for CapEx. We're expecting another big boost there, and also their costs. We'll also want to see if there's any color on TikTok impact and any pushback from advertisers after Zuckerberg yanked the fact-checking function there. And, Meta seems to have had a good start to the year, Ed. Analysts at Jefferies are calling it a top AI stock pick. They're expecting to see strong returns on investments in AI from things like their Llama LLM. And, we had the TikTok ban all, for but a day. How much of a tailwind is that? And what else is on your radar here with Meta?
Yeah, Meta's doing very well. It's among these big names, it's the one that's growing the fastest right now. So it's doing really strong. A lot of it's AI, but a lot of it's advertising too. I mean, this is where they make their money, and they seem to be doing well with that. They've shaken issues from a couple of years ago about Apple privacy that hurt them. They've come real roaring back. They controlled their costs somewhat. It's been just doing really well. Yes, growth is starting to slow, but that's after a really strong pace. I mean, there was a couple of 2023 and 2024 really strong years, so it's going to slow a little bit. But this has been doing very well. Seems to have done pretty well with AI, and it just yeah, the TikTok could be an issue. You just don't know how that's going to go. And I don't, that's what makes it difficult to know how to play that. And it's hard to know if I mean, obviously Facebook has done just fine and Instagram have done fine, even when TikTok is out there. So it's not like it's a doom, but it does create a wild card. You just don't know when that's just going to drop. No, TikTok really is banned. No, TikTok is going to be bought by Elon Musk. No, the US government's going to own it. So you don't know what headlines might come out of TikTok in the next couple of months.
All right, Ed. Well, let's take a look at the chart. And we're on the daily here. And you can see Meta moving up the right side of this flat base with a 638.40 buy point. And nice to see it come above this 600 level here. Also retook that 50-day line a couple weeks ago. So what are your thoughts with the action here?
Yeah, I mean, it's been, it tested under there. It went below the buy point, but it really did find support at the 50-day line, bounced back pretty quickly. I mean, it's not necessarily the same thing as all these companies getting advantage of the Stargate AI infrastructure, but it's made a nice move here. If it weren't for, it's coming up to a new buy point, 638, you probably could have used today's move if it weren't for earnings. You probably could have, because treat this sort of short-term high that's above almost everything. Looks like it might be a record close for the stock. So it's just that, it's just acting very well. There's been some nice, there's some volatility over times, but it's also, if you look at the relative strength line, so even when the stock was coming down, it's really the relative strength line has even then has sort of generally trended up. I mean, there's been some downs here and there, but some of that's been when the market hasn't been great. And then these last two bases just sort of rising, coming back down to the top of the base, and then moving again. So been an orderly move, and a really strong move over this year and really the last couple of years.
Yeah, and just we're on the weekly chart here, but anything standing out in terms of fundamentals to you, Ed?
Yeah, again, it's slowing down, but really strong. I mean, it's been a really strong growth the past couple of years. Yeah, and uh, this is really a top tier company. It's not growing the 100% and everything, but wow, for a tremendously large company, it's growing at a very brisk pace.
All right, well, let's move on to Apple, which is scheduled to report Q1 earnings on Thursday, January 30th. Earnings are expected to rise 8% to 235 per share, and revenue is seen climbing 4% to $124.5 billion. And here's why we're watching Apple. The tech giant is expected to guide down on iPhone sales in the current quarter. So we'll be looking for more information and impact there. And Ed, Apple beat Wall Street estimates for the fiscal fourth quarter, but the stock fell because of that anticipated sales growth target for the current quarter there, especially with iPhone. So, what are your thoughts here with Apple?
Yeah, I mean, Apple is not growing particularly fast. I think there's still hopes that maybe as Apple Intelligence, its AI offerings really get fleshed out and spread to more markets, especially China in the long run, that'll turn around. But there's real concerns about China, which their AI features really haven't reached there. And there are very advanced firms. Like Apple had a lot of advantages because there were certain reasons why its local competitors were sort of on the back foot, but they've been able to work around various US restrictions and they're back. And meanwhile, Apple hasn't, they don't, Apple doesn't have all the full functionality that you might have had in the US. So that's a concern because if, Apple, that's such a huge market. And so that would I think that's the big concern. I think that's why people are expecting maybe talking down the iPhone for the current quarter, January to March, because of its China woes. But again, maybe that's priced in, so that's a concern. Maybe this is the bottom and we really will see as AI and Apple Intelligence picks up steam.
All right, Ed. Well, let's go ahead and take a look at the chart because Apple broke out of a flat base with a 237.49 buy point on November 29th. But since then, it's really round tripped. It undercut the low of that base here. And as you mentioned, just completely breaking down, we're getting closer to that 200-day line. So, what are your thoughts with the technical action?
Yeah, I mean, it did seem like a strange move given that you kept on seeing these reports. Those don't seem to, things don't seem to be so great in China, but that really picked up this year. So yeah, maybe this is a shakeout. Maybe now it's gotten under there. You've probably shaken out a lot of people. Maybe you can find support here. But I don't know. I mean, where you buy it, it would still be below a lot of this resistance. There's a lot of resistance from here to the 237 level at least, along with the 50-day line. So it seems like you'd want to get above that kind of area before you'd want to get involved. In which case you've had a pretty big bounce. So it just makes it tricky. I mean, it's one thing if you have a lot of conviction in it and the stock comes off earnings and then you want it, but it just seems like it's going to need some repair time after a pretty significant drop unless you get a real sense that there's a turnaround in their business and a real ramping up of growth.
And let's go ahead and switch over to the weekly because as you can see, it's really flirting with that 40-week line there. We can see the relative strength line really dropping off as well. So any thoughts here, Ed, on the weekly chart?
Yeah, the relative strength line is clear there. And again, just that the growth that we have some growth now, but that's also after there was a number of quarters of weak sales. So now we're seeing sort of modest sales growth on relatively easy comparisons with a new iPhone and everything. We're not seeing the big pop. We're not seeing anything really go, wow, here we go, kind of growth. So it just seems like there's other mega caps that are growing faster, let alone more nimble, uh, AI or other players.
All right, Ed. Well, those were some of the top names on our radar for next week. But as you mentioned, it's a big week. There's a lot of earnings reports out there. So why don't we go ahead and start with some defense names then, starting with RTX, also formerly known as Raytheon. We're still on the weekly chart here. We can see it's building a cut base with a 128.70 buy point. got above that 10-week moving average last week. So what's your thoughts here with the technical?
Well, I think what, with this one is that it's getting maybe support here. I think there was concerns heading in about what a Trump administration might mean for defense spending, and this is also some civilian, but really nice bounce here. It found support at the 200-day line. It's come up. It'd be great if it could form a new little base here, but or not a base, a handle here. But really strong action. We're seeing that with a number of aerospace names coming up. So that would be the concern. The thing is, it's not growing tremendously. It just has defense stocks just don't have that kind of growth for the most part. It's made a pretty good run. Can it keep on running again when the growth isn't that strong?
All right, well, let's take a look at another name that's Boeing. They're also scheduled to report, and we can see this one not doing as well as RTX, but looks like it got above this 40-week line, the 10-week moving average moving up as well. So building that cup with handle base with a 182.57 buy point. So what are your thoughts here?
Yeah, I mean, one of the issues, this one just, as of Thursday night, it just pre-announced negative news. And so you can actually see in the after hours there. So we'll see how that reacts over the next couple of days. Pre-announced some negative results for Q4. So it may not be that much of a mover next week. As it turns out, that just happened. But it was almost like a plague of locusts. It seems like it ever, and you can see loss after loss after loss. I mean, it's just amazing how many years of losses this company has had. I mean, this goes all the way back to the the 737 crashes from years ago. Then you have COVID. Then you have, then all sorts of things that have gone on. There are all sorts of delays last year. Then there was a strike in Q4. Every time you think they're finally going to get bounced, and let's be honest, if this weren't a duopoly with Airbus, this one might be doing a lot worse. People are still, I mean, it'll be interesting to see if they do still anticipate earnings next year to finally snap that, because that will be a buy point here. Is there a turnaround? But been really waiting a long time for the fundamentals to turn around on this company.
All right, well, let's take a look at Northrop Grumman. Ed, what are your thoughts here?
Yeah, this one's not doing as well as RTX. I mean, maybe a little bit better than Boeing. So been pretty strong earnings growth overall, but that's partly because the Q4 of last year, I think this is a gap number kind of thing. There was a loss in Q4 of last year, so it's not like they have this tremendous growth rate. It's more like I think that they're going to see earnings versus a loss more so. And I think so. I'm not sure if you exclude certain items how much it is. On this weekly chart, you can see it's gone sideways for several years. It just hasn't made a whole lot of moves. Can it really go on a real run? Whenever it goes on a run, it seems to fall back. So I think, that would be the concern here. Is it going to really move?
All right, well, let's take a look at Lockheed Martin, also reporting next week. We're still on the weekly here, Ed, and looks like this one broke out way back here in July of 2024, and it's really fallen off those highs ever since.
Yeah, some of this, Elon Musk, who's a big, like that Trump's Doge kind of thing, government efficiency, basically said, "What's the deal with this F-35? This is, why don't we just go with drones?" So that wasn't good for Lockheed. It wasn't good for Northrop either, which is a big subcontractor. But you can see that that's part of the reason why things have fallen off. They didn't get so much of that Trump bump because there's concerns about and defense spending and what have you. It may turn out to be unfounded, but that's an issue. It needs to get above the 200-day, 40-week line before, and then a lot of other progress. It just needs some repair work, it looks like.
All right. Well, let's switch gears a little bit and take a look at service now, Ed. We're still on the weekly here. It's basing with a 1157.90 buy point, and really this week moving above that 10-week line. So what are your thoughts here? We see the RS blue dot, also good to see. So potential entry point here, Ed.
Yeah, I think earlier in the week when it went above the 10-week, 50-day line, broke a trend line, you can see that, it was that offered an early entry. Now it's sort of in between that early entry and the buy point, and earnings are coming. So it just seems like the risks are higher, sort of in no man's land, especially after running up so many days. I mean, it'd be very normal for this to come down for a couple of days, even if it's modest. So it just makes it higher risk heading into that. This one has really strong growth. This one seems to be doing well with AI. And so this is a pure business software maker with AI things. So people will be really looking at this one in addition to everything else. Again, this is another one that's supposedly coming out on the 29th. Again, just so much going on for that evening. But yeah, this is doing really well. It'd be great if it just paused here and then moved on earnings, but definitely one that has been a strong performer for a long time.
Let's take a look at a couple financials, starting with Visa Ed. Still on the daily here. This one broke out back here in October, had a nice rebound above the 50-day line the other week. But what are your thoughts here with the technical action?
It's pretty solid here. I mean, there have been better ones. It has the RS line has been improving the last few months, but it had been sort of sluggish before that. But it's making a move. It seems like payment stocks are coming up generally. That point where it came above the 50-day, 21-day line probably was a place where you could have entered. Sort of because it sort of gapped up earnings. It's sort of that whole area sort of found support near the bottom of that gap up from the previous earnings or around, not the earnings, or maybe around election day. Yeah. So I guess, and that's probably the election day gap. And so it sort of found support at the bottom there. And then, but now it feels extended. That's all. I mean, but it's acting well. It doesn't seem like I have a place to buy it.
All right, let's take a look at MasterCard as well within that same theme. Again, this one above that 50-day line broke out back here in September of 24. But what are your thoughts here?
Not doing quite as well as MasterCard. I mean, it's closer in range. It's still in range, you could say, within a short consolidation near the 50-day line. But earnings are coming up, and it hasn't done as well. The RS line is more sideways here. But again, this is another payments. They're still doing solid. If the economy is doing well, if travel's doing well, because they get a lot of money on cross-border payments, both MasterCard and Visa. So the underlying fundamentals, these are solid long-term performers.
All right, let's take a look at Caterpillar. Let's get an industrial name in here. This one building up the right side of that consolidation for 1850, an official buy point there. But it looks like it regained that 50-day line this week and really getting above this 400 number here. So what's your thoughts with the chart?
Yeah, probably could have bought it today or when it came off the 50-day line. Not only is there that 400 level, but if you sort of did a downward sloping trend line, over this last few days, from 418, I meant actually from 418 over the 412, and then sort of, yeah, so this week there's been sort of ways you could have gotten into this. At this point, you probably want to wait for earnings, especially because it's in there. So again, it'd be great if it just sort of came back a little bit, paused, maybe found support around or just below 400 and then moved. This has gone on runs at times, but you can see the growth really hasn't been there. It sort of had sluggish fundamentals. It's coming down, and it's even though, and 2025 isn't looking to be much stronger so far.
All right, well, let's go ahead and move on to Decker's, Ed. We're on the weekly here. What are your thoughts on this chart?
This one was probably actionable, the last couple of days, but earnings make that more difficult. You could treat this almost as a de facto flat base. There were several weeks of tight action, so it got above this 214 or 15 level, rebounded from the 10-week line, been largely finding support at the 21-day line. So it basically just it's doing everything right in this regard. It's had solid growth. The growth is supposed to slow, I think, quite a bit going forward. But it's sort of like really slowed down in this quarter. I think because the comparisons are getting really tough now. So that would be interesting to see if that growth rate can actually hold up a little better. But it's been doing really well. It's one of those handful of shoemakers that's been strong performers for a while.
All right, well, let's take a look at Brinker International, restaurant group, Ed. Again, still on the weekly, and this one's been on a really nice run since this breakout back in September 24. And what are your thoughts here? How can we get into this one?
I don't know when you can get into this one. That's been a problem because it's just done so well. It's greatly extended. It sort of quietly broke out, when a few other names were going out too, but its growth was sort of sluggish at the time. So it was like, no big deal. But that really has picked up. Look at that. Look at the last couple of quarters. And so uh, that's saying something there. It's supposed to be really strong growth going forward, at least through 2025. So you need to pull back to the 10-week line. It just really hasn't offered much. I mean, you could have like, it got close to the 10-week once a year, but once it moved, and sometimes you miss them. And and a lot of people did, but boy, it's acting great, and it really does have good numbers right now.
All right. Well, we'll keep an eye on that one. And Ed, we also have a bunch of oil and gas names reporting next week as well. And you and I talked for a video that's on investors.com looking at all the Trump actions and how that might impact the energy sector. So, again, another shameless plug to check that out. And you sent me some information about Halliburton. They fell after reporting better than expected or Q4 adjusted earnings this week. But warning of softer activity in North America and Mexico, and kind of one of the points you made when we were talking about all these Trump energy plans was, even if we have these executive orders, it doesn't mean that these oil companies are just going to change strategy overnight. But let's go ahead and take a look at ExxonMobil because they're up next week as well. We're still on the weekly chart here. And again, this one just seems like it's trying to get back above that 10-week line.
Yeah, that one really hasn't. Some energy names have come back. This one really hasn't. And oil's bounced back. Natural gas has bounced back, but the relative strength line looks terrible on this. And it just hasn't gotten back at all. And it's sort of interesting why that is. The earnings are coming down, but the price, this one moves on price because people anticipate, well, it doesn't take too many math. They can say, well, they're probably going to make this many barrels, and this is what the price is. So it generally tends to move on price, but it hasn't gotten that big of a boost given the price. So this just seems like the energy space is always difficult because of its reliance on price, but this one seems definitely a laggard even within that.
All right, well, let's check in on Chevron and see if they're faring any better. This one, again, we're on the weekly here. Looks like just above the 10-week and 40-week line, which is converging there. So what are your thoughts here?
Yeah, you could see a base that's sort of there, like, around 160, but this is sort of, or literally that whole area there. So, I mean, it could be a buy area, but it does feel like a lot of other energy names are there. So I think these reports will be more about, and they've already given some guidance about capital spending too. So they may not really shock anybody with what they say, but what they have to say about what they think their production levels, what they think they'll do on capital spending, that may be relevant for some of the equipment and services and drilling firms that are doing well rather than these companies. They just seem to be laggards even in the energy space.
All right, well, let's just take a look at one more just for fun. That's Baker Hughes. Ed, this one looking a little bit better, broke out of a cut base last week. That was a 45.17 buy point, still in that buy zone, but looks like it's reversing lower this week. So what are your thoughts with this chart?
Yeah, it's falling because energy prices have come down quite a bit. Actually, it's surprising how well this is done because this week I think so far, oil prices were down like 6.5%, and Baker Hughes is holding up. I mean, that's not down too much given the huge gains in the past few weeks. There's obviously an anticipation that there'll be stronger drilling. Halliburton was a little bit like, I don't know about that. Halliburton isn't doing nearly as well as Baker Hughes. So Baker Hughes is obviously doing something right in that regard. But yeah, I mean, if it holds around here, I think you'd want to wait for earnings. It'll be the same day as Exxon, the same day as Chevron. So, or not say, or maybe the day before. But that'll be important for these, things. But definitely been acting well. It'd be great if it just sort of paused here for a little bit heading into earnings. But yeah, definitely one of the leaders in energy right now.
All right, Ed. Well, a lot to get through today. So thank you so much for your insights. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And thank you so much for watching, and we'll see you all next week.